Before you buy your next cup of coffee, before you fill up your gas tank, before you pay another bill, stop. Because something you can't see, something happening in Washington right now, is quietly reaching into your pocket, shaping what your dollars are worth every single day. And no, I'm not talking about conspiracy theories. I'm talking about the US federal budget and how this year's budget decisions decide whether your money stretches further or evaporates faster than ice on a Texas sidewalk in August. Today, I'm going to explain, in simple, real-life terms, how the budget affects the dollar in your pocket. No political spin, no economic jargon, just the truth about your paycheck, your savings, and your financial future. This topic is one of the most searched right now. How the federal budget affects the economy. Why the dollar is losing value. Inflation explained. And budget deficit explained. So buckle up, because what I'm about to share affects every single American, no matter where you live or how much you make. Let's start simple. The federal budget is basically the government's financial plan, how much money it expects to bring in through taxes and how much it plans to spend. If the government spends more than it collects, we get what's called a budget deficit. And every time that happens, the government usually borrows money to fill the gap. That borrowing stacks up into something we all hear about constantly, the national debt. Searches like National Debt Explained and Government Spending Impact blow up every year because people know this isn't just a number on a government website. It affects you directly in ways most people never realize. Now here's where the budget reaches into your life. Every dollar the government spends has a ripple effect. When government spending goes up, especially without enough tax revenue to balance it, more money enters the economy. And when there's more money chasing the same amount of goods, prices go up. That's inflation. And inflation is the silent thief that eats your paycheck, your savings, and the value of your dollar. Let's make this real. Say you earn $1,000 a week. If inflation is 5%, that's like losing $50 in value without ever touching your money. Groceries cost more, rent goes up, car repairs go up, utilities go up, everything goes up, except your paycheck. This is why inflation and the US dollar is one of the highest searched money topics in America today. Inflation hits first and hardest at the family level, and government budget decisions are a massive driver of that inflation. Now let's talk about the next domino in this chain reaction, the Federal Reserve. When inflation rises because of overspending or a growing deficit, the Federal Reserve tries to slow it down by increasing interest rates. This affects your credit card payments, your mortgage rates, your car loans, your student loans, and even your ability to get approved for financing. This is why people are searching things like interest rates and inflation, why everything is expensive now, and cost of living 2025. When the budget drives inflation up, the Fed steps in and you pay more to borrow money immediately. Now, let's talk about the value of the US dollar in global markets. When the government runs huge deficits and piles on more national debt, global investors start losing confidence. And when confidence drops, the dollar weakens. A weaker dollar makes imports more expensive, which affects everyday Americans through higher prices on electronics, gas, food, clothing, medicine, and almost everything made overseas. So when you hear people asking, why is the dollar losing value? Or why are groceries still expensive? A big part of the answer is the federal budget. Yes, and this is where things get interesting. Government spending isn't automatically bad. In fact, smart government spending can actually boost the economy. For example, investing in infrastructure creates jobs. Funding scientific research leads to innovation. Education spending helps build a stronger, more skilled workforce. Emergency spending can prevent recessions. This is why searches like stimulus impact on the economy spike during economic downturns. But there's a catch. It has to be strategic. When spending grows faster than revenue and faster than economic growth, it becomes a long-term drag on the country and your wallet. Here's the truth nobody wants to say. America doesn't necessarily have a spending problem. or a tax problem. It has a balance problem. Imagine you earn $5,000 a month, but regularly spend $7,000. You can get away with it for a while. You can use credit cards, you can borrow money, you can take out loans, but eventually the interest alone starts crushing you. That's exactly what's happening with the federal budget and the national debt. And just like a family drowning in debt, the consequences hit your wallet the fastest. So what does this mean today in the 2025 US economy? Here's the short version. Higher deficits, more borrowing. More borrowing, higher national debt. More debt, higher interest payments. Higher interest payments, less money for public services. Less public funding, higher taxes or reduced benefits. Higher taxes plus higher inflation, your buying power shrinks. Whether you're a student, a parent, a retiree, or a small business owner, your money is now battling forces way beyond your control. Yes, but it requires trade-offs. To stabilize the value of the dollar, the government can 1. Reduce unnecessary spending. 2. Increase tax revenue. 3. Grow the economy faster. 4. Improve efficiency in federal programs. 5. Encourage private sector investment. 6. Strengthen the dollar through better fiscal policy. None of these are easy, none are magical, but all of them impact the most important thing to you: how far your money goes. Here's the hidden truth that most Americans never hear. The federal budget is not just a political document. It is a financial decision that decides the value of every dollar you earn. It affects how much your groceries cost, how much your rent rises, how much interest you pay, how much your savings grow, and how much financial freedom you actually have. So the next time you hear about the federal budget, budget cuts, new spending plans, or the national debt, don't tune it out. Because every line on that budget is connected to the dollars in your pocket, your paycheck, your savings, your future. Money is not just made at work, it's shaped by decisions made in Washington every single year. And now, you finally understand how the budget affects your dollar. If you found this breakdown helpful, hit that like button, subscribe for more clear, practical financial insights, and share this video with someone who should know where their money's really coming from and where it's going. Got questions or want us to cover another money topic? Drop it in the comments below. Until next time, stay informed, stay empowered, and make every dollar count.